Hi guys, so for today's video, I'll be covering on this upcoming new launch at Canberra Crescent Residences, and also I'll be doing a comparison for the newly TOP projects nearby, Watergardens at Canberra, and also the Commodore. So from these two projects, you can kind of get a sensing of what to expect for Canberra Crescent Residences, and also this will be the cheapest new launch for 2025. Stay tuned to the end of the video to see if Canberra Crescent Residences is something suitable for you. So for those of you that want to take a look at the show flat after my analysis, you can feel free to scan the QR code or WhatsApp me at 84849302 because the preview will be happening in a few weeks time, so feel free to reach out. For those of you that's not familiar with the Canberra Crescent Residences area, right, the plot of land will be over here, this L-shaped plot of land. We are in between Canberra and Sembawang MRT station. So for this area, right, we are mainly surrounded by quite a bit of new HDBs. They are going to be MOP or already MOP. So they are less than 10 years old in this area. And you are surrounded by a couple of resale ECs, and also older resale condos. For the amenities and schools, here you have the Sembawang CC and then the Bukit Canberra complex together with the indoor sports hall and also the hawker center. So I will cover all of this more later on. This is how the current site area looks like on Google Maps, and you can see when you zoom in, this one will still be the same L shape that I mentioned just now, and right in front of us will be the landed cluster. For this plot of land, one of the key points to mention is the distance towards the MRT. We are looking at about 800-900 meters range. The north-south corridor, right, it will also be completed next year, 2026. So it will also increase the accessibility from the Canberra Crescent area and along the red line. And for those of you that's familiar with the red line, Canberra MRT only opened recently in the area. A few years ago, it wasn't populated enough, so it will be underutilized. And then the government now, they added on the Canberra station because they already started to build up the amenities populating the area, so the station will be sufficiently used. Because of Bukit Canberra and also Canberra Plaza, right, a lot of the amenities in this area has already been sufficiently met. In terms of the gyms, swimming area, shopping malls, hawker center, I feel it already meets the needs of most HDB owners, upgraders, and even retirees. Now I'll be talking about the land bids for Canberra Crescent GLS site. So Keng Leong, they submitted a top bid of $793 PSF PPR, total bid of $279 million for this Canberra Crescent site. They managed to attract 3 bidders. The first and second bidder is kind of close lah. They are not too far off, only about $4 million off. This is the lowest OCR land bid since 2020. Excluding ECs. So I think this is a very strong draw for this development, and definitely one of the reasons why you should consider if you are looking to even invest or buy for own stay. For this plot, Canberra Crescent site, right, it can yield up to 375 units. Bukit Canberra, this is an integrated sports and community hub. So they feature multiple amenities like hawker center, swimming pool, and the indoor sports hall. And also this land bids, right, of $793 PSF PPR is higher than what was previously bidded for the site at Canberra Drive at $644 PSF PPR in 2020. So you already can see in just the past 5 years how much the land bids has actually gone up despite being a harmonized GFA plot. Previously it was still not under the new ruling yet. I'll be covering on the two nearby comparisons, which is the Commodore and also Watergardens at Canberra. So for these two projects, they launched in 2021. They sold out their units in about 1-2 years time after the launch, and from there we can see the recent transactions because they just recently TOP. We see whether this area is profitable or unprofitable. You can see this is the master plan based on this Canberra Crescent site. So if you look closer, just now I mentioned this is the landed facing side. Very likely because the plot ratio is 1.6, right, we should be looking at not high-rise development, and based on the data we have, it should be like maximum of 12 stories. They're going to be staggering like this for the whole development. Do take note, these are still empty plots, right, but they are already zoned as schools. For those of you that prefers a slightly unblocked view, try to get above the school level, which is usually 3 to 4 levels high. And also for this side as well, And do bear in mind, because these two sites, they haven't been starting the construction yet. Later on, they start to have the schools, right? Then the construction start, you might actually have to face more noise. The landed side, the facing will be the more expensive ones. When you look at the surroundings, right, actually for the plot ratio of 1.6 for Canberra Crescent Residences, actually you're surrounded by quite a few HDBs that has a higher plot ratio and taller buildings as compared to Canberra Crescent. If you want purely unblocked views, I don't think this will be the development, because very likely they're going to be shorter than the nearby HDBs. We have the comparison at the Commodore and also the Watergardens at Canberra. So just to orientate you a little bit, they are within walking distance towards Canberra MRT station. And then just now the plot that we talked about, Canberra Crescent Residences, it's a 8 to 10 minutes walk towards Canberra MRT station. So for these two plots, they are of course nearer towards Canberra MRT station. To give you guys a little bit more context, back in 2021 August, the Watergardens at Canberra launched and they sold about 60% of their units. And some of the four bidders, right, they were actually priced below 1.8 million at 1382 PSF. So this is pre-harmonization era, inclusive of aircon ledge. So I would say for that era, right, even at Canberra area, the take-up rate was quite decent also. Like, people generally didn't think that it was too ulu place, and I think the upcoming amenities like the Bukit Canberra, all this was one of the selling points for Watergardens at Canberra. So for the Commodore, also achieved very strong sales on launch day, with 74% being sold. So this one was also back in November 2021, and you can see this is a low-rise development, right? And it still sold 74% of the development on launch day. You have a very specific target audience, but it's still quite acceptable for the people staying there. From my memory, right, because I was also involved in these two launches back in 2021, the consensus on the ground was that because the entry price and quantum was quite attractive, people were still willing to buy this area, even though it was considered like ulu or still a bit further away from town area. Back then, during that 2020-21 timing, right, other than the Commodore and the Watergardens at Canberra for the lower PSF and quantum, we also had Treasure and Tampines. So for all these developments, they are mainly selling on attractiveness of entry price. For Canberra Crescent Residences, even though it's a low-rise development and also it's at the Canberra Sembawang area, that it can achieve 70+% or even higher on the launch day itself. From what I see, it is the cheapest launch of 2025, and for buyers that are priced out of even Springleaf Residences or even the Faber Walk plot, the next best plot will be this Canberra Crescent Residences already. Let us dive deeper into the Watergardens at Canberra, the site information. TOP in 2025, this year, so the land size we are looking at is 296,000 square feet. Plot ratio of 1.4, so this is also another low-rise development, and the number of units is 448. The developer is one of the reputable ones at UOL, and if you go see some of the home tours, facilities, and how they plan on the site plans, and also all the greenery, right, it's all very well done and certainly speaks of their build quality for UOL. And you can see based on the residential analysis, 86% coming from Singaporeans, 11% PR, and then only 1% foreigners. So this is an area that is predominantly strong demand from locals. So I think this is a very good sign, be it you are buying for own stay or for investment, because I will still see a very strong exit strategy from the locals. This is the entire site plan itself. Because this is a low-rise development, they have quite a bit of units, right? There's a lot of blocks actually. This 296,000 square feet land, right, you have a total of 14 blocks. So for some of the other developments, maybe you can see at the Lentor area or the upcoming Springleaf, even though they have a much bigger plot of land, their site plan, they don't have so many buildings. They could play around with more facilities, and you don't really have the tennis court, all this, because there is a limited constraint on the land. Yeah, so what they did mostly was just on the water facilities or this swimming pool. Okay, so next up we have the information on the Commodore. So the Commodore, right, TOP slightly earlier in 2024, and then the land size we are looking slightly smaller at 194,000 square feet. So same with the Watergardens at Canberra, plot ratio is at 1.4. So total number of units is 290. Very similar trend in terms of the residential status. So a strong 87% coming from Singaporeans, about 11% for PR, and also about 1% from foreigners, mainly dominated by local demand, which is Singaporeans. Firms up the exit strategy towards the HDB upgraders, also for Singaporeans looking for entry-level condominiums. So this is the overall site plan itself. Honestly, not very exciting. So over here we have 6 blocks, water feature, swimming pool, lap pool area, and other than that, most of the facilities are just surrounding the development itself. Actually, when we look at it like this, right, it does look like a very simple development, but I was quite surprised at the transactions also. Okay, so now for the technical analysis, right, for this particular area, for Watergardens at Canberra and also the Commodore. So back then, when these two projects launched, most of the people that didn't want to enter these two projects were saying that this area is not safe because of the multiple ECs nearby. And I do understand that because for the ECs nearby, and most of them were also launching at that time, there was a significant price gap. And on top of that, there were quite a few resale ECs as well. Like we take example from the Visionaire, some of the older ones, one Canberra also. So with all these XECs and ECs present here, do you think the Watergardens at Canberra and the Commodore actually resulted in profitable or unprofitable transactions? So let's go deeper into it. Starting off, we have the Watergardens at Canberra, right? You can see the transactions and profits over here. In terms of the profit amount, the 4-bedder over here comes at the highest one at 438,000. In terms of the total quantum, it doesn't seem so impressive, but I think the more impressive one is actually based on the annualized returns per year. And considering the capital outlay that time they entered at about 1.8 million, they were able to profit at 400 plus K amount. I think it's quite a good amount of profit based on their initial outlay. Of course, there are projects with higher profit margins, but I think for now, yes, this is not the best project in terms of profit margins, but in terms of annualized returns and capital upfront, it is still at one of the better ones already. And you can see even for the 3-bedders, 2-bedders, they are all racking in quite high profit margins of 200 plus thousand range. And the more important key point I want you guys to take note, right, is look at the transaction prices. In terms of PSF for this area, right, Canberra MRT, we are looking at already 1,007 PSF and even 1,008 PSF for the resale. And these are all transactions within the past 1 year. 1,008 PSF, 1,008 PSF. And of course, these Watergardens at Canberra, we're going to be looking closer towards Canberra MRT lah. But this will kind of form the basis of comparison, right, for what I will use at Canberra Crescent Residences. And imagine their PSF PPR is 793. We'll be expecting a PSF launch probably in the 1,007 to 1,008 range. Of course, the distance towards the MRT is not going to be as near, but do bear in mind, for 1,007 and 1,008 PSF, this is a harmonized project. So it's really, if you convert back towards the old calculation, right, the PSF is going to be even lower in the 1,006 to 1,007 range. Watergardens at Canberra and also the Commodore to form my entry price and how I will guide my clients, whether this is a safe entry and also formulate our walkaway price for that development. The Commodore, we also can see the profit amount, right? Even for the 4-bedders, 3-bedders, we are looking at between 400 plus K all the way to 100 plus K. So of course, the transactions and the Commodore is a lot lesser because it's a smaller development. And I think in terms of what the development can provide, is a lot lesser. So that's why you can see the profit margins for the Commodore is slightly lower than the Watergardens at Canberra. But overall, I think in terms of annualized gain, still not too far off. We are looking at between 5% plus to 6%. Based on the PSF, of course you got one lower 1,005 PSF, but other than that outlier, majority of the units 1,008 PSF, 1,007, 1,008, 1,008, 1,008, and there is a 1-bedder even at 1,009 PSF. So you imagine in the resale market, right, for Canberra area, we already have buyers willing to fork out even at $1,900 per square feet, and this is the newly TOP project. I do understand for the north area, especially like Canberra, it's not commonly accepted by majority of Singaporeans. But in the end, right, in the area itself, it does still have its natural demand, seeing that it can still transact in the 1,008-1,009 range for a newly TOP project at Canberra MRT area. When you look at the data and the numbers, right, you always want to take out the emotions, because when you want to look whether this project can buy or not, the main thing is you want to see about the qualities of the project and also what entry price you are looking at. So this is already what people are paying at for the resale market. And I would say this forms a very strong safety net for those that is looking to enter Canberra Crescent Residences even at 1,008 to 1,009 PSF. So just now I did mention about the natural demand for this area. Now let's take a closer look, right, within 1 km of the demand and supply of this area. So based on my search criteria, 1 km of Watergardens at Canberra, and then the transactions within the past 1 year, and we are looking at the 3 bidders only. So these come up with 12 past projects, and we already have 192 past transactions within the 1 year, and we have 185 listings, 3 bidders still available. So for the demand to supply ratio, we are looking at is 192 is to 185. So this comes up to a healthy ratio of 1.037. So what this means that for every new unit in the market, very likely one unit will have already been sold off. You won't have an increasing supply versus demand in this area. If you reference to my previous videos on other developments that I've done, maybe when I just compared to, let's say, D15, it won't have such a strong ratio as that area, but for this particular area, it is already sufficient, right, to have a buffer for your exit strategy. You're not fighting with a lot of listings for the same group of buyers. And also, if you already can see these kind of ratios coming up for the resale market in this area, I won't be surprised for Canberra Crescent Residences to achieve the same launch day sales as Watergardens at Canberra and also the Commodore, which is at 70+% sold on launch day itself. So now you've kind of seen how I actually analyzed the Canberra Crescent area, right? If you need a more personalized approach for yourself and you're not sure whether this bedroom type is more suitable for you or you should go for another bedroom type, you can feel free to WhatsApp me at 84849302 for your own personalized consultation. So now that we have seen the profit margins for the Watergardens at Canberra and also at the Commodore, I want to compare, right, for these two launches versus the nearby EC, are they the most profitable ones? Like, for example, are they profiting more than the resale ECs there? Or are the nearby ECs actually profiting higher than these two developments? So we don't want to leave those out, because in the end, if you are a viewer on this channel, very likely you're looking at numbers. And for me, I would also like to explore whether the nearby ECs, if you buy in the resale market, will it be more profitable than the new launches? So for this comparison, I will have 5 projects. First one will be the blue color one, the Commodore, and then red color will be Watergardens at Canberra, teal will be Province, brown Visionaire, yellow Park Canberra. So these will be my 5 main comparisons. And you can see the data will be from the launch period all the way to recently based on the price gap. For 2021, the Watergardens at Canberra compared to the Visionaire, we have about a 28% in terms of price gap. But we fast forward to 2025, the Visionaire to Watergardens, right, the price gap we are only looking at a 17% price gap. So what this means that even though Watergardens at Canberra profited about $300 per square feet, the Visionaire actually outperformed Watergardens in terms of percentage. We can't be sure about the quantum yet, because maybe the Visionaire, their entry price at 1,000 PSF, right, is much lower in terms of quantum. So even though the entry price was much lower and the profit margin is higher, they might not necessarily earn more than the Watergardens, but definitely their annualized returns will be much higher. Even Watergardens profited about $300 per square feet. The Visionaire profited about $400 plus per square feet. That is why the gap managed to narrow down to 17%. Next up, we have the Commodore, and then we compare to Province Residences. That time, this one was at a price gap of 19.2%. And then fast forward to 2025, the Commodore versus Province. So this one will also be looking at the smaller price gap, although not as much as the Visionaire, but it's a smaller price gap. So it means that very likely Province residents also outperformed the Commodore. And last but not least, we compared the Commodore at 2022 versus the Visionaire. So this one presents a very similar price gap from what we see at the Watergardens at Canberra, 28% price gap. And then we fast forward to 2025, you can see the Commodore, we already experienced from about 1004, 1005 PSF all the way up to 1008 PSF, so about $300 to $400 PSF gain. The Visionaire also achieved the impressive $400 PSF gain. This resulted in a 20% price gap. The Visionaire actually caught up to the Commodore by about 8%. So what does this tell us? For brown color line, which is over here, so this one is the price chart for the Visionaire. Actually, it has been outperforming all the other developments here, but this is also a resale EC. So even though in terms of percentage is outperforming, right, and probably one of the best out of this area, but in terms of quantum, we can take a closer look. It might not necessarily outperform the other two launches. So now let's take a look at the profits, right, for the Visionaire. When we see the transactions, this one TOP in 2018 and then it is supposed to MOP in 2023. So for those transactions between TOP to MOP, right, very likely they got special permission to sell earlier. So for all these transactions, it's a bit on the rarer side because these are the pre-MOP deals. So the possible exemptions, right, are really based on case-by-case basis because some of them, they might not have the MOP rule because they got to sell it earlier before the MOP. Your next buyer, they might not have the MOP rule and also can rent out, can have income ceiling and might not need the family nucleus. These are all very subjective. I can't be sure for the HDB side what did they approve them on, but at least we know that these three transactions, they transacted in 2021, right? They are all the rare pre-MOP deals. So you see, they bought in the 2 bedders and 3 bedders, right? Between the quantum of 700 plus thousand to 900 plus thousand. And then fast forward to 2025, they actually managed to cash out above 1 million. And you can see the profit margins over here range between 300 plus thousand to 400 plus thousand. And then the annualized return, right, we're looking at 10+% easily. With the most impressive one, we are looking at 13% annualized capital gains. So why was the Visionaire able to achieve such a feat, right? It's because they had a huge gap of 28% between the new launch and also the resale EC. So that is why they had very impressive annualized gains that actually outperformed both new launches and also on par with profits in terms of quantum. Okay, so after analyzing what happened at the Visionaire, right, which coincided with the launch for Watergardens at Canberra and also the Commodore, right, what can we learn? Based on my current research, the only project that is this rare pre-MOP will be Park Canberra. So for those of you that maybe have budget constraint and then you want to leverage on these pre-MOP deals, you can also look at Park Canberra because very likely the Canberra Crescent Residences, when they start to launch, it will set a new benchmark in this Canberra area. What this will help is it will also push up the prices at Park Canberra, which is a EC that haven't reached MOP yet. So this is something that I think you can explore if you fulfill certain criteria. And now let's take a live look at what are the listings available for Park Canberra. Okay, so right now we can see this is at PropertyGuru and then I search for Park Canberra. So right now, based on these listings available, right, we have 9 properties on sale. And you can see, like, you see the first one over here, we got a ground floor unit, 926 square feet at $1,500 per square feet asking. And this is at 1.4 million. Let's take a look at the listing. Then you can see over here, they got a brand new TOP project unit. And you see based on the description, they say TOP in 2023. So this one only about 2 years, they haven't fulfilled the MOP period. You see? So you see just now I mentioned about some of them needing a certain criteria, right? So for this one, they do need the family nucleus in order to fulfill the eligibility. But of course, you need to check whether for the MOP period or you can rent out, do you need to fulfill this criteria, then you can buy, or They don't have restrictions on all this. So this one you need to go and find out, because judging on just now the transactions I share at the Visionaire, right? For those rare pre-MOP deals, maybe they just have to fulfill this family nucleus criteria, right? But they didn't have to fulfill the MOP criteria of 5 years. Most of them, they could sell within a 3-year period. So all these things you need to find out before you make a purchase. Of course, I'm not saying this is a 报价 for sure can earn money one, but this is something that maybe you can explore if you are tight on budget and then you still want something with a very safe entry price. So let's scroll down the listings. You can see there's another one, a 4-bedder asking at 1,003 PSF. Of course, this one I don't know whether it's real or not lah. Let's take a look. This kind is not real one lah, because this one very likely just fishing for buyers. Inquire with this agent, very likely you won't already, the unit is not available anymore. Some of all these not real listings. Then this one is the same unit. So you can see the same unit, right? They have multiple agents marketing it. Yeah, so I would say it's definitely less than 9 listings, because I think a lot of them are not real one lah. It's all clickbait. So when we see some of the transactions, you see I just click another one. Yeah, you can see these are all very likely not real listings. You see, how can it be still direct developer pricing? Because this one already TOP 2 years already leh. So all these agents, they're just refreshing the listing and they are of course not real lah. Yeah, so you can see a lot of them repeated by the same agents. So judging by this, out of the 9 properties for sale at Park Canberra, there is only 1 unit available and they are marketed by 2 agents. So I think this is really the fastest fingers, because I think this is a decent deal and potentially can yield what we see at the Visionaire as well. So that's why you see for the Visionaire, just now I did mention there were only 3 units that were having these pre-MOP deals. So if you guys also need further advice on all this, you can feel free to reach out to me, WhatsApp me at 84849302, and we can see if this is something suitable for you. Okay, so now just to take a further look on the transformation happening in the area. So what I like about this area, you can see for this plot, further than that, right, you see a lot of zone for subject to detailed planning for residential, but the government actually has a lot of plans coming up for this area. They could come up with other mixed development, other HDB, so this will further cement the exit strategy, future price ceiling and benchmark, right, for Canberra Crescent Residences. This is very similar to what we see at the Tagore area for Lentor when we compare between Springleaf to Lentor area. Okay, so the next part I'll be covering is the recent land bids, right, for the ECs in Singapore. So the upcoming one is this Sembawang Road site. This is a 204,000 square feet land, plot ratio of 1.4. This is the potentially closest plot coming up towards Canberra Crescent, this GLS plot. The experts they expect about 700 to 710 PSF PPR for this EC plot at Sembawang. So now we take a look at the past transacted land plots, right, for the ECs. So first up we have this Jalan Loyang Besar. So this one is at Pasir Ris downtown east area. And this is at 728 PSF PPR. So I estimate using the same formula for Lentor Central, right, the PSF we should be looking at about $1,600 per square feet. Plantation Close. So this one is also known as Auto Place, is coming up this year. So this one will be 701 PSF PPR. And then you can see the estimate launch price, we're looking at between $1,500 to $1,600 per square feet range. The most recent one, Orel at Tampines at 721 PSF PPR. Based on the number of units sold, it was an average of $1,766 per square feet. So when you already compare what is transacting at the current EC versus upcoming new launch, right, I do think it's very attractive in terms of pricing. And here the highest PSF actually was at 1,789 transacted. So definitely very, very strong already for EC pricing. And next up, we also have the Tampines Street 95. So this one is Tampines West area, and then 768 PSF PPR. So this one was the record high for EC pricing, and we estimate the launch price to be 1,720. So do bear in mind this is a higher land price than Orel of Tampines, and Orel of Tampines, these two plots, they are by Sin Lian, so very likely we should see a similar pricing strategy. So for a lower land bid price, they already managed to achieve this kind of pricing. I won't be surprised if this Tampines West plot, they can even launch at 1,008 for some of the high floor units. So this also brings to the question where, if we already see all the ECs at this kind of pricing, what do you think is a reasonable safe entry price for a new launch development? Although maybe the location not as ideal, not as near MRT, but it's still in a semi-mature estate. So using all this data, right, we already can see whether this Canberra Crescent Residences, is it a project that is of safe entry price, or are we looking at something that is overpriced for the area, and also what is happening in the EC market as well. If you guys like my analysis so far on Canberra Crescent Residences, you can feel free to leave a like and subscribe. And also you can check out my YouTube channel on how I do the analysis for the previous new launches. So we should be expecting the preview for Canberra Crescent Residences coming out in next few weeks. So if you would like a personalized consultation using data, you can feel free to WhatsApp me at 8484 9302. Looking forward to hear from you guys. Bye!